All right. Good morning, everybody. Good morning, everybody, and happy Monday. Today is September 30th, 2024. And the top story this morning, where do I start? There are several stories, I think, all incredibly important. It was really hard to come up with a title this morning. It was hard to come up with what do I talk about first, in what order. So in no particular order of importance, here's the big ones happening this morning, and there's a lot. First of all, automakers. There's been no like one massive story in autos, but we've had this drip over the last 3 weeks of stories of auto financing, of stories, loan loss provisions at Ally Financial, and then CarMax reported earnings last week. They took big hits for loan loss provisions. And then we've heard about dealer inventories building up. And now the UAW and Stellantis are going back and forth over promises of investments in plants. And we're not going to invest in ramping up production if we're already sitting on too much inventory. Of course, the whole EV space is a mess because of rapid depreciation and a lack of demand for EVs. And then this morning, we got a report from both Stellantis and Aston Martin, both European automakers, big time reductions to their profit forecast. Both stocks are getting crushed this morning, double-digit percentages. They're dragging other names like Ford and GM down with them. The whole car space is a mess this morning. They're both anticipating big-time negative free cash flow for the remainder of the year. And it's the same theme, guys. They're worried about lower demand. Now, Stellantis is also including things like increased competition from China, whereas Aston Martin still sees market opportunity in China. So it's not just the China story that's killing automakers. China is overproducing vehicles and they're exporting a lot, which is hurting rest of the world sales for some U.S. and European makers. But it's this demand picture, guys, and it's the consumer, both in the U.S. and in Europe, but particularly in the U.S., he can't afford cars. I mean, that's what it's boiled down to. Cars just got so outrageously expensive during the pandemic. It dragged up used car prices with it. The debt levels associated with vehicles, I mean, $1,000 car payments becoming normal. That's just boggles my mind that people have $1,000 car payments. And we're not talking about $1,000 car payments for a freaking Porsche 911 Turbo. We're talking about $1,000 car payments for freaking like soccer mom SUVs, like not particularly fancy vehicles here. And now, of course, the consumer savings is largely gone. The wages haven't gone up. And even though Bloomberg and all these partisan hacks in the financial press keep telling us over and over again how good we have it, the truth is people cannot afford cars. We know this because all the people they owe money to on their cars are telling us they're not paying. So you can believe the journalists, air quotes, who tell you it's the best economy ever, or you can believe the people who are owed money for cars that are saying we're not getting paid. Make up your own mind. Who do you want to believe? Car space is having big trouble here, guys. This could end up being a campaign issue. I mean, it's another candidate for an October surprise here. Michigan is one of those states that's up for grabs. Harris is still leading in Michigan right now. It looks like she's going to carry that state. But if the auto space continues to deteriorate at the pace it's currently going, then we may see union jobs becoming a problem in Michigan, in which case the candidates would start getting frothy at the mouth and each lining up for handouts to the auto industry to try to buy those votes. Cash for clunkers 2.0. It is coming. Whether it gets here before the election or after, my money says probably after, but you never know, guys. It's a tight race. Also going on, Hurricane Helene. Absolute mayhem over the weekend. Now, this story kind of snuck up on a lot of us, and I didn't realize how bad Hurricane Helene actually was until I heard from my friend Melody Wright, my fellow contributor over at Doomer's News Network, who lives in Tennessee, and she had no power and no cell service all weekend. Now, she was able to travel to a distant location in order to do the live stream for DNN this weekend. Thank you, Melody, for persevering, and the show must go on. But most of the effects of Hurricane Helene, as bad as it was in the Florida coast, around Big Bend, most of the real severe damage was hundreds of miles inland, flooding and mudslides in Tennessee. And the city of Asheville, North Carolina, has been, I don't want to say wiped out because a lot of the buildings are still standing, but they've been just inundated and nobody can get in or out of the city. All of the overpasses, smaller bridges and highways, they're just washed out. So we still don't know how bad things really are in Asheville, North Carolina, because nobody can get to the city. Nobody can get in or out. Gas lines are an hour and a half long already. People queuing up for gasoline. There was talk over the weekend about fears of dam failure. I'm hearing about some smaller dams have failed. Other dams, they just had to blow open the floodgates to let the water out, flooding downstream communities to keep the dams from failing catastrophically. Damage estimates range at the moment from $15 billion to $100 billion. That's a pretty wide range there. And that just goes to show you that they haven't even really begun to assess the damage. The death toll as of this morning is at 90 and rising. It's probably going to exceed 100. So this storm kind of came out of nowhere. I mean, it was expected to cause damage on the coast, but the flooding and the mudslides inland, I don't think anybody was really expecting that. A lot of people in the southeast and the Appalachian cities were really caught off guard. And it's still causing flooding. It's still raining all up and down the East Coast, causing flooding all over the place. So we're not done with this storm yet. And there's 4 or 5 others that are already brewing out in the Atlantic. The Chinese FOMO continues this morning. China stocks up big. Again, the CSI 300 index is now up 25% in 5 trading days. All right. It's up a quarter, 25% in just 5 days. And I'm seeing headlines out in the press today or people in videos talking about things like buy first, think later. Oh, that's going to end really well. Buy first, think later. They're actually saying this on Yahoo Finance this morning when it comes to Chinese stocks. I'm sure that's going to end really well for people who just don't pay attention to what they're buying and just pile in. Well, I mean, I guess that worked for all the AI shareholders so far, but that's not going to end well either. The FOMO is getting pretty ridiculous in China here, guys. But you know what? The People's Bank of China have opened the floodgates of stimulus, helicopter money. We've seen how that ends. All right. It ends with asset prices rising substantially, followed by consumer prices begin to rise and inflation. And then last but not least, the wages start to rise. But that's when the central bank says, oh, no, we can't let the plebs make more money. Interest rate hikes that cause higher unemployment. Rinse, repeat. All right. The Fed just did it. We watched it here in the States for the last 4 years. And now the People's Bank of China is doing exactly the same thing. Meanwhile, in Japan, another thing we have to keep an eye on. I told you it was hard to pick a top story this morning. Japan, you had Shigeru Ishiba won the Liberal Democratic Party nomination for prime minister. He's viewed as a monetary and fiscal hawk, although the yen started to strengthen pretty substantially on Friday night. We saw the yen go from about 146 to the dollar down to 142. Much stronger yen on that news. And it started to get so worrisome that Ishiba was actually out in the press starting to jawbone dovish over the weekend, trying to reassure investors that we're going to keep monetary policy easy for the time being. Yes, I'm in favor of more rate hikes, but very slow. We're certainly not going to make the market unstable, and we want to spend to support the poor, and we want to spend to support the military. So, the market started to get worried about that yen carry trade again on Friday and over the weekend. And Ishiba is already out there trying to do damage control. The guy hasn't even taken office yet. So Japanese stocks were down big. The Japanese currency was strengthening. It took Bitcoin down over the weekend. But right now, U.S. stocks don't seem to care too much. We've got the oil market just totally shrugged off massive military action by the Israelis over the weekend. Hassan Nasrallah, basically terrorist numero uno in Lebanon. He was blown up over the weekend. I'll be honest with you, good riddance. The guy is a stain on humanity. That being said, it's certainly not going to help the peace process at all. And so, bombings in Beirut, the Israelis also struck the Yemeni port city of Hodeidah, I don't know how to pronounce it, but they blew something up there because the Houthis shot missiles at Tel Aviv. Oil markets do not care. Escalation of military conflict and the price of oil is barely moving. It's actually heading lower because we got a breakthrough over the weekend in Libya, and it looks like some of that Libyan oil production will be coming back after the rather comical spat over who's going to control the central bank in that country. And last but not least, we got another nuclear reactor is going to restart in the United States. This time it's Michigan's Palisades nuclear reactor just secured a loan from the Department of Energy for Holtec International, who owns that plant. They are going to restart that one pending approval by the NRC, which I won't be holding my breath on because the NRC does nothing fast. But more nuclear restarts, a resurgence of interest in nuclear power because everybody is expecting significantly higher power prices in the United States if this ridiculous build out of data centers continues. Remember, guys, every single GPU that NVIDIA sells uses as much electricity as a family of 4, every single one of these GPUs. And NVIDIA is selling hundreds of thousands of them. That means entire freaking cities worth of electricity demand is popping up out of nowhere right now. And I don't know if you guys noticed, every time we try to build a power plant in this country, the idiots with the pink hair start throwing Campbell's soup on famous works of art and crying something about climate change or smashing gas pumps with hammers. Those people are still in charge of energy policy in this country. So I wouldn't expect huge amounts of new power to suddenly come online in the next few years. So get ready for higher power prices. They're coming, guys. We got a lot to talk about this morning. It's been a busy weekend. Let's shrink my big melon of a head. Don't forget that like button if you feel so inclined. And if you're new here, hit that subscribe button so you can have your coffee with the melon heads every morning as we go through markets and financial news. The S&P 500 is down 11 points this morning, 0.2% lower. I think probably the Japanese story right now is in the driver's seat for U.S. stocks. We've also got the Dow is down about 67 points here, 0.16%. But keep in mind, guys, all the stocks are down this morning, but we were at or near all-time highs at the closing bell on Friday. So a little bit of red is called for here. The NASDAQ, meanwhile, down 32 points, 0.16% lower. So stocks down marginally pretty much across the board. We've got a ever so slightly stronger dollar this morning. It was actually negative for most of the morning, but now we're up 2 basis points, 100.40 for the US dollar. I'm guessing it's largely being driven by the euro because it sure isn't the yen. Take a look at the yen versus Friday. Now, guys, this is over the last couple of months. We're going back to about June here. Remember, we had this rapid strengthening in the yen that led to that mayhem on August 5th, all right? That's what the market is hoping to avoid a repeat of. Now, this was Friday after Shigeru Ishiba was announced as the new head of the Liberal Democratic Party. All right, so you can see how the market, the Forex market, started to freak out a little bit. Over the weekend, after he won the race, you saw a significant strengthening of the yen in just a matter of hours. We went from a high of 146.5 to the dollar all the way down to 142. In a matter of a few hours. That is a significant strengthening of the yen. Now, over the weekend, Ishiba came out with some pretty dovish words, and that's what gave us this little bit of green here. You can also see Japanese stocks did not react well to Ishiba's nomination as the head of the Liberal Democratic Party. This is the Nikkei 225 index in Japan. It lost 4.8% yesterday on that news. So we saw Japanese stocks selling off. We saw significant strengthening in the yen. And Ishiba was out there trying to do damage control. He's not even in office yet. Japan's incoming PM, Ishiba, calls for loose monetary policy. This guy's supposed to be a hawk. He just got the nomination, and he's already out there talking dovish. This is how much financial markets control banks and central banks and politicians. The second assets start to sell off a little bit, they're like, oh, no, don't sell off. Stocks don't go down. Number go up. Japan's incoming Prime Minister Shigeru Ishiba said on Sunday that the country's monetary policy must remain accommodative as a trend, signaling the need to keep borrowing costs low to underpin a fragile economic recovery. It's something the Bank of Japan, which is mandated to achieve price stability, will decide while working closely with the government, Ishiba told public broadcaster NHK when asked about further interest rate increases by the central bank. From the government standpoint, monetary policy must remain accommodative as a trend given current economic conditions, he said. On fiscal policy, Ishiba said he will aim to compile a package of measures at an early date to cushion the economic blow from rising living costs with a focus on helping low-income households. So this is almost sounding a little bit like the Inflation Reduction Act, which was laughable. It did nothing to reduce inflation. It actually made it worse, if anything. But he's almost suggesting like stimmies for the poor might be coming. This is a guy who's supposed to be a monetary hawk. I mean, if this is a hawk, I'd hate to see what the dove would have done. But just his winning the race significantly strengthened the yen, started to cause a sell-off in stocks. And already he's out there with this dovish rhetoric to try to contain things. So keep an eye on Japan, guys. We could see a repeat of that August mayhem, that early August problems. Nothing too alarming yet, but we're heading in that direction. Now, looking at the bond market this morning, we got yields are higher pretty much across the board here. The 30-year Treasury, 4.102. That's up about a half of 1 point. The 10-year, 3.766. That's up 1.5 points. Still rising, that long end of the yield curve. The 2-year, 3.612, up almost 5 points this morning. And the 1 month at 4.806. That's also up 1.5 points. So we got a big move in the middle of the yield curve, notably the 2 and the 1 year really moving today. Not so much on either end. Now, looking over at the commodities board, we got a lot of red this morning. We've got gold is taking a breather here, $2,639 for spot gold. That's down about $18, almost $19 here, or 0.71% lower. We've got spot silver is also sharply lower this morning, $31.24 an ounce for spot silver. That's down almost 40 cents, or 1.25%. We've got copper futures off by 1.6%. Platinum futures down 2.9%. Palladium down 2.6%. And even crude oil is a little bit lower this morning. Guys, Israel blew up the head of Hezbollah yesterday or Friday. They also attacked a port in Yemen. There's missiles and rockets landing all over Israel, and oil prices are down. What does that tell you about the demand situation for oil? What does that tell you about what the oil market thinks of this rally in the Chinese stock market? If we were expecting this surge of industrial activity in China, don't you think oil would be telling us right now? Wouldn't oil be moving higher on that news? But it ain't. Oil, $68.10 for November WTI futures. We've also got Bitcoin is sharply lower this morning, off about $1,462 as priced on Coinbase, trading at 64,137. That's down pretty significantly from where we were on Friday. I believe that news in Japan is probably what's causing this. Bitcoin is one of those asset classes that, in my opinion, has benefited from the yen carry trade, from the cheap borrowing costs over in Japan. So I'm not surprised to see Bitcoin down while the yen is having its rally overseas. And also something I wanted to point out, guys, this is China's CSI 300 index. We got just another obscene green candle yesterday in China. That was the one from this morning. This is what happened late last week. You think Chinese stock markets are enjoying this little stimmy montage that's going on over in Beijing? The Japanese stock market, the CSI 300, is up 25% in 5 trading days. This is ridiculous. And again, they're using phrases like buy first, think later. That sounds an awful FOMO-y to me, guys. That sounds a lot like FOMO. Now, look, nobody is out there saying China's stimulus is going to do anything to fix their economy. Nobody is out there saying the property crisis is now solved. Nobody is saying the demographic collapse in China is now solved. Everybody's just saying China's going to print so much money that asset prices are going to go higher. This is a chart of future inflation in China is what this is telling us. Look, I'm not buying into these stocks right now. I think a lot of U.S. asset managers are probably piling into stocks like Tencent and Baidu and Baba right now. They're probably going to do all right on those trades because those things are probably, I mean, I don't know, maybe it's up 25% in 4 or 5 days, guys. The trade has already happened, all right? You probably missed this one if you haven't already. Sooner or later, there's going to be some big red candles in China. Maybe this carries on for another day or two, but nothing goes up like that forever. Just obscene amounts of buying. Nobody's wondering what they're buying. Nobody cares what they're buying. It's just about what the central banks do. Again, we've seen this play before. We know how this one ends. Now let's talk about oil a little bit here. Oil prices slip as traders shake off prospect of wider Middle East conflict. It seems like no matter what happens in the Middle East these days, there is nothing that will send oil prices higher short of a blockade in the Strait of Hormuz. I don't think anything will. Oil futures edged lower Monday, losing ground as traders appeared to shrug off the risk of a wider Middle Eastern conflict that could threaten crude supplies after a strike by Israel on Beirut killed the leader of Iran-backed Hezbollah. Hezbollah on Saturday confirmed that an Israeli airstrike had killed its leader, Hassan Nasrallah, the latest and heaviest in a series of blows delivered by Israel against the Iranian proxy in recent weeks. A number of other top officials were also killed in the attack and subsequent strikes over the weekend. Israel also targeted a seaport and power plants in Yemen after Iran-backed Houthi rebels fired missiles toward Tel Aviv in recent days. The oil market's response to developments in the Middle East over the weekend has been somewhat muted. That's according to Warren Patterson and Ewa Manthe, commodity strategists at ING. The market has become increasingly numb to the tension in the region, given that after almost a year of conflict, there has still been no impact on oil production. Actually, the other way around, the conflict in the Red Sea has actually caused a little bit of additional oil consumption. They're saying all these ships sailing around the Horn of Africa because they don't want to get shot at in the Red Sea, that it's burning about an additional 1 million barrels of oil a day just to sail around the world or around the Horn of Africa. So if anything, this conflict has added to some demand rather than disrupted much of the supply. Now, there has been some supply disruption in the Middle East, or I'll say in Northern Africa. That was in Libya, but that might actually be going away because we got this news this morning, and this is probably why oil prices are red here. Libyan assembly paves way to oil restart with central bank vote. Now, we had some major supply disruption in Libya over this story, and it looks like it might be behind us now. Libya's eastern-based parliament approved a new central bank governor, ending a standoff over control of the OPEC members' vast energy revenue and setting the stage for a full resumption of oil output. Libya normally produces about 1.2 million barrels of crude a day, but that figure dropped to less than 450,000 barrels in late August after the divided country's government in the West fired veteran central bank chief Sadiq al-Kabir, and its eastern rival ordered an oil shutdown in response. Libya's competing administrations on September 26th signed a United Nations brokered agreement that brings Issa, a former head of the central bank's issuance department, as new chief. The crisis has been the war-torn country's worst in about 4 years. So it looks like that Libyan story is kind of overwhelming any of the potential disruptions caused by the increased violence. So oil barely moving here, guys, if anything, in the red. Now, another story that might be weighing somewhat on oil prices is this one about the European automakers. This is big news here, guys. More bad news in the automotive space. Stellantis and Aston Martin shares dropped sharply after profit warnings amid China woes. Now, they're kind of blaming China here. Look, China is not causing problems for Aston Martin. Aston Martin does not sell many vehicles in China. If anything, Aston Martin still thinks they can increase their sales into China. This is really being driven by demand, if you ask me. Stocks of European car makers hemorrhaged early on Monday as Stellantis and British luxury brand Aston Martin issued profit warnings, citing broader industry challenges and difficulties in the world's largest auto market, China. Stellantis on Monday trimmed its 2024 annual guidance on the back of deteriorating global industry dynamics and bolstered competition from China, sending Milan-listed shares lower at the open. The French-Italian conglomerate, known for brands such as Chrysler, Dodge, Jeep, and Maserati, warned of lower than expected sales across most regions in the second half of the year. It now pencils in an adjusted operating income margin between 5.5 and 7% for the full year of 2024. That's down from their double-digit outlook. So a big cut to profit margins here. Deterioration in the global industry backdrop reflects a lower 2024 market forecast than at the beginning of the period, while competitive dynamics have intensified due to both rising industry supply as well as increased Chinese competition, the automaker said. It also lowered projections for its industrial free cash flow to a range of between minus 5 billion euros to minus 10 billion euros from a positive guidance previously as a result of a lower anticipated AOI, that's average operating income margin, and temporarily higher working capital over the second half of the year. So guys, they're saying negative free cash flow. They went from positive to as low as negative 10 billion in free cash flow. This is not like we're just going to trim our guidance. They're wiping it out. They're saying we're going to lose money for the rest of the year. The automaker further attributed the revisions to its guidance to decisions to significantly enlarge remediation actions on North American performance issues, but supplied no additional details. Earlier this year, Stellantis was sued by shareholders in the U.S. who claimed the automaker defrauded them by concealing rising inventories and other items. Remember, the buildup of inventory at U.S. dealerships has become a big problem. Stellantis has started to cut back production. Now that's landed them in the crosshairs of the union, who says, last year we had an agreement. You said you wouldn't do that. So Stellantis has got a big problem here. Now they're basically wiping out their profit outlook for the rest of the year, calling for negative free cash flow. Now, Aston Martin's not much better. British luxury car maker Aston Martin, whose iconic models gained notoriety via appearances in the James Bond movies, also flagged cuts in its profit margin and production targets for the year. It announced a roughly 1,000 unit reduction in response to disruption in its supply chain and continued macroeconomic weakness in China, anticipating that its earnings before interest, taxes, and depreciation and amortization, or EBITDA, for 2024 will now come in below the previous year's performance. The company said it no longer expects to achieve positive free cash flow in the second half of this year, and noted that its full-year gross margin is expected to come in below 40% compared with a previous target of around that threshold. So, got another one saying we're not going to achieve positive free cash flow. Both companies saying we're going to lose money this year. Now, look at the stocks here. Stellantis down 12.6% ahead of the opening bell, getting just absolutely hammered here. And guys, Aston Martin, even worse, 23.8, almost 24% in the red ahead of the open for Aston Martin. These stocks are getting crushed. And look, it's not just those. They're dragging down their friends too. Ford down 2.6% ahead of the opening bell. General Motors is down 4% ahead of the opening bell. Automakers are getting clobbered here. I've been saying it for about 2 weeks now, guys. Cash for clunkers 2.0. It's a-coming. Now let's talk about this storm, guys. Hurricane Helene kills at least 90 homes and memories washed away. This one really caught a lot of people in the southeast, up in the mountain regions, off guard. Look, everybody's expecting hurricanes to cause damage along the coast. Nobody's expecting it to cause these big problems up in the mountains, but that's exactly what happened. The southeastern U.S. began a huge cleanup and recovery effort on Sunday as the death toll climbed towards 100 after Hurricane Helene knocked out power for millions, destroyed roads and bridges, and caused dramatic flooding from Florida to Virginia. The storm's winds, rain, and storm surge killed at least 90 people in North Carolina, South Carolina, Georgia, Florida, Tennessee, and Virginia, according to a Reuters tally of state and local officials. Officials feared more bodies would be discovered. With cell phone towers down across the region, hundreds of people had yet to make contact with loved ones and were listed as unaccounted for. Damage estimates range from $15 billion to more than $100 billion. Insurers and forecasters said over the weekend, as water systems, communications, and critical transportation routes were affected, property damage and lost economic output will become clearer as officials assess the destruction. In North Carolina, nearly all the deaths were in, forgive my pronunciation here, Buncombe County. I don't know how to pronounce that, guys, where 30 people died. Sheriff Quentin Miller told a video conference call with reporters. County Manager Avril Pinder said she was asking the state for emergency food and drinking water. Streets in the picturesque city of Asheville were submerged in floodwater. This is a devastating catastrophe of historic proportions, Governor Roy Cooper told CNN. People that I talked to in Western North Carolina say they have never seen anything like this. Guys, the city of Asheville is just totally cut off from the outside world right now. Every major highway in or out of the city has been washed away. People can't get in or out. They're queuing up for gas lines. There's dams that were at risk of failure. Conflicting reports of some smaller dams have failed or some were only at risk of failure. There were evacuation orders, some pretty strongly worded evacuation orders over the weekend, especially around Lake Lure. They were worried about that big dam failing. Apparently, those fears were somewhat overblown. But this storm wreaked havoc inland, hundreds of miles inland, big problems. There's videos on X of flash floods rolling through people's yards at like 90 miles an hour. People just had no chance to get out of the way of these things. So thoughts and prayers are with the people that were in this storm's path, guys. It's probably going to be a couple of days, maybe even weeks before we even really know the extent of the damage from this storm. And there's several more brewing in the Caribbean at the moment. And last but not least, guys, let's talk about this one. Michigan nuclear plant finalizes federal loan to support the first reactor restart in U.S. history. Look, last week we were talking about 3 Mile Island getting the restart from Constellation Nuclear. Now we've got Palisades in Michigan. The Palisades nuclear plant in Michigan has closed a $1.5 billion loan to support the first reactor restart in U.S. history, the Department of Energy announced on Monday. Palisades owner Holtec International hopes to restart the plant in the fourth quarter of 2025, subject to approval by the U.S. Nuclear Regulatory Commission. Holtec is a privately held nuclear technology company headquartered in Jupiter, Florida. All necessary funding has now been secured, said Nick Culp, a Holtec spokesperson. The company will use the funds for inspections, testing, restoration, rebuilding, and replacement of equipment at the plant, according to the DOE. Holtec has completed all major licensing submittals to the NRC. Company executives expect to receive a response from the NRC sometime in 2025. So that's the big question mark here is, will the NRC approve the restart of the Palisades plant? My guess is that will be contingent upon a whole litany of inspections and testing and other things. But look, guys, this is the second one in a couple of weeks. We closed a lot of nuclear plants over the last 15 years. Some of them are starting to come back now. Those that weren't torn down, like the one where I used to work at least, they're like halfway through tearing that one down. That'll never come back. But there's a reason this is going on, and it's not being talked about, all right? As we talk about this AI boom, as we talk about the AI build out, and all these AI executives are making, in my opinion, ridiculous statements about how we're going to build 3 small modular reactors by the end of next Tuesday in order to power our 5 gigawatt data center. Like this is just snake oil that they're selling, guys. Small modular reactor technology is exciting and I'm hopeful for it, but it's not happening anytime soon. It's going to take years. The NRC has only licensed 1 reactor design, and there are none of those reactors currently scheduled to be built. They were trying to build one in Utah or Idaho, I think. No, it was Utah. They canceled that plan earlier this year. So there are no small modular reactors currently under construction in the United States. That being said, these older plants, these big, main generating stations, they're coming back because the utilities know power prices are going up. All right. AI is going to make your electricity bill higher. That's what these articles are telling you about. You don't hear Sam Altman talk about that. You don't hear Jensen Huang talk about that when he puts on his stupid jacket and makes his stupid comments about all the ridiculous things he thinks his technology is going to do while he's selling mass amounts of his own stock. What they're not telling you is these stupid programs that tell you to glue your pizzas together and hallucinate and generate fake sexual images of young girls, terrorizing young girls. It's going to make your electricity bills go up. All right. They are putting the demand of entire cities on the grid out of nowhere. And we cannot build power plants in this country at any kind of scale in any kind of reasonable time. We tried in the last decade and it caused some severe bankruptcies. And then there's also the fact that nobody's allowed to build anything anywhere near anybody or anything at all. The NIMBYs have become bananas, build absolutely nothing anywhere near anyone. So we're not going to be able to build new plants. They're restarting some older ones because that's easy. That's only going to get you so much power. If we keep building these data centers like gangbusters, you can expect inflation to come back, guys. Your power prices are going higher. And look at what utility stocks have done in the last year. If you think I'm kidding, utility stocks have exploded higher in recent months. And I just want to say thank you so much to Mr. Brian Kutzinger for being a Melonhead member for 6 months. Thank you so much, Brian, for your support of the channel. And Brian says, thank you for your dedication to the truth, Jack. You are most welcome, sir. It is my pleasure. I'm happy to do so. And thanks again for your support of the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate that very much. Thank you so much, Brian, and all my Melonhead members on YouTube and Patreon. I got links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.